Good morning, everybody, and happy Monday. I hope you guys can all hear me okay. And then we're going to get started here in just a moment. It always takes a little bit to get going on a Monday morning, so hopefully everyone already had a cup of coffee or a workout or whatever it is to get you going on the day. But uh, but thanks for being here. Let's get started. We have um, likely another important week. We ended last week with an important price action point that we wanted to address. I have quite a few things that I would like to go through and give you some perspective on as far as that is concerned. So let's get started here. Again, good morning, everybody, and happy Monday. Serge Berger here from thestudytrader.com. This is our Set the Market morning call. We're going to spend the next 10 to 15 minutes going through some of the things on our notepad, and then we're going to continue on over in our members area trade ops right after that. Well, we obviously would be remiss not to talk about last Friday's move. We had a strong rally. I've got a bunch of things to talk about on that, so that'll be number one. Then I would like to give you some insight as to what's happening to some of the leading asset classes in terms of leading indicator stuff. That should at least be something everyone, I think, should be aware of. Not so much something to panic about, but I think everyone, again, given the fact it's the year of the trader, should be open-minded too. So let's start off with that. I mean, maybe just starting off with just the S&P 500 itself, maybe just for a little bit of perspective. We had a big rally. It was 1.5% on Friday, got us right back to more or less all-time highs. What's interesting is if you look at the intermarket sort of behavior, you will notice that it was energy stocks and material stocks that actually led, along with consumer discretionary, led the rally. Why consumer discretionary? Because lower rates is the hopes that it helps out the consumer. We'll find out over time if that's going to happen. Energy stocks because of the debasement of currency with lower rates, more debt. Same thing for materials and to some extent even financials. It is notable that technology, although up also 1.4%, once again was not leading. And I think this is just so important for people to understand that the market behavior, the tone of the market has changed. So if you look at this multi-asset class year-to-date performance chart that I keep talking about, yes, the NASDAQ 100 is up 12% on the year, and that's very good. I didn't think we would be up 12% at some point this year, yet here we are. Mag 7 stocks are up almost 10, but they are lagging a lot of other things. And that is particularly important for those of you guys that have and gals that have portfolios. The portfolio construction here is so critical to understand. Before we go into a little bit deeper on all of that, let me just start off by giving you the perspective of a chart that we talked a lot about last week, which is the equally weighted S&P 500 chart. So that's essentially this one right there. Versus the regular S&P 500. So one thing we talked about last week and we kept pointing out throughout the week and even the week before and I think the week before then is that the regular S&P 500 broke out to fresh all-time highs in June, but the equally weighted S&P did not do so. And it now finally did on Friday. It was up, I think, almost 2%, so more than the S&P 500. The reason why that's important is because, yes, we're seeing market broadening, but we're seeing market broadening because of the debasement of currency. So to take us back to a chart that I talked about last week, you might recall I talked about this scissor chart, which essentially is the NASDAQ 100 or stocks, let's call that broadly, in blue up, yet the dollar in red down, right? So it's not so much that these risk assets are going higher just because they're going higher and everything is amazing, is because the dollar is going down. So if you were to look at last Friday, the dollar index was once again down, quite notably so. So if you have a portfolio, it's just, or if you're just trading, it's critical in my view to understand the difference between that this is not about everything is awesome as much, although maybe to some extent that's part of the input, but it's the dollar going down. So I want to quickly reiterate that. Now, for me, what I'm going to be looking for this morning is I'm going to be watching very closely how are stocks going to behave this morning. And to show you this, I already created a chart, and that's this chart here. So the blue line is Bitcoin, and you can see last Friday's rally started at just about, obviously, 10 o'clock Eastern time on Friday when Fed Chair Powell gave his speech, and then everything went up. Bitcoin went up, stocks went up, but Bitcoin, because it trades through the weekend, obviously gives us a bit of a leading signal, and you can see Bitcoin as a risk asset has actually now completely retraced back to, in fact, below where Bitcoin traded before last Friday's Fed announcement, Chairman Powell's meeting. So the question, of course, is if the NASDAQ 100, which again is the purple line here, is going to move lower and also completely erase last Friday's rally. I do not know the answer. We will have to determine, but that will be very important to watch, because if that happens and investors start feeling a bit different than how they reacted on Friday, on a summer Friday, mostly algo driven, then, and that's an if, right? I do not know the answer. We will find out in time. But if that were the case, then we could have a situation where last Friday's rally would have been a very significant, what we call a fake out rally. Again, I have no bet on that. I will decide once, if and when we see that. If we don't, then obviously things continue to go higher. But to me, that's the risk here from all this. I will tell you that we received a lot of new buy signals from a momentum perspective over the past, on Friday. And so this would go against that. However, I'm also very aware that on a summer Fridays, things can act a bit differently. Thin volume. Again, there was obviously the news that broke on Friday. So I would be open-minded coming into today. It's going to take a little bit of time for this market to find itself. But I think there is the risk that we start to see. There's the risk, and again, I don't want to make a forecast because I do not know, but there is the risk that the NASDAQ 100 goes down and basically follows Bitcoin here on a sort of a reversal of Friday's move. So I'll be watching that very closely. We'll talk about it over in trade ops. And again, if you guys have any questions, please let me know. But I thought this was quite helpful. I want to elaborate a little bit more on, once again, a theme that we've been talking about all year, which is hard assets outperforming. And so again, if you look at the year, I have a really good chart for you guys in a second. You're welcome, Craig. Good to have you here. It's critically important to understand the outperformance of hard assets year to date, be that gold, silver, a whole bunch of other stuff, and European stocks, emerging markets, so on and so forth. So that's important. Now let's go a little bit deeper on that to a chart or to an asset that I've been talking about all year, and that is the price of silver. What you have here is a chart that goes back to, if you take the blue line here, somewhere back to the late 1990s. This is a weekly chart of, now pay close attention, of the S&P 500 divided by silver. Okay, what the hell is that, right? So what this chart shows us is that the S&P 500 has been outperforming the price of silver. You can see a big rally there in the late 80s all the way until it topped out in the year 2000. And then it and then also we had a big rally once again from 2011 all the way to 2024, right? And so these are two very big rallies that we had in stocks, but it is possible now that stocks are going to start underperforming the price of silver, right? And so this is again this is this currency debasement. This is not. I'm just giving you silver as one example. It doesn't have to be just silver. We could use silver as an example of other hard assets, be that gold or some other stuff, right? And so I think we're at a very similar spot to where we were back in the year 2000, somewhere near. And ironically, and this is really not my point, quite frankly, but ironically, we're somewhere similar to where we were just around the internet bubble. That's not really the comparison I was trying to make, but it is funny how that matches up, right? So, by the way, there's also a lower high, so if you want to be technical about it, but I do think there's the risk of stocks now significantly underperforming, not just silver, which is this chart, but also other hard assets for probably years to come. And everyone's gung-ho about AI. I get it. It's a great growth stories, but it's the only main big driver here. So I just want to quickly let this marinate here for another couple of minutes. If you guys have any questions on this chart, please chime in. Take a picture of it. But it also could be a reminder, again, through the lens of education. I can't give you advice here, just educationally. If you have a portfolio and you probably are extremely underweight hard assets, you're probably extremely overweight tech stocks. If this chart and all the other research we've been talking about for 12 months is any guidance, then it would be very helpful to look at your portfolio and also look at the stuff that you trade, right? If you have gotten in the habit of, kind of trading chart breakouts for the past 15 years on stocks, there's a good possibility that stops working, at least on the kind of stocks that I've worked over the past 10, 15 years. And so that could be a very painful experience if one does not adjust to that. So again, any questions, please let us know. You can also just leave a question once we're done here in a second. I'd be happy to revisit with this. We are doing a special session this week on momentum trading. Momentum trading is, I believe, always going to be with us, but it's going to be very important that we start moving toward different stocks and things that have momentum. And we believe that tech stocks are going to not be the momentum stocks for possibly a number of years. So whether you're just trading or you're an investor, this is a really critical point here, we believe, that we want to pay attention to. So if there's no questions or no questions yet, we'll leave it at this. Trade Ops members, I'll see you guys over there in a few minutes. As always, I hope this is helpful. Have a great start to the week, and let's watch very closely this morning if, and again, it's an if, I don't want to make a forecast because I do not know if Bitcoin was any guidance, because Bitcoin is now completely retraced its entire rally from last Friday. The NASDAQ 100 is obviously going to start trading here in about 10 to 15 minutes. So have a great start to the week, folks, and we'll see you guys on the inside and back here again tomorrow morning at 9:15 Eastern. Thanks for being here, and have a great start to the week.